Good morning, everyone. Today is Thursday, April the 6th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform with charts brought to you by Trend Spider. And so, what do we have this morning? Well, we had some jobs numbers that are a little bit weak. Now, I'm not really sure whether the weak jobs number would have made the difference. What we are doing is retracing a little bit of motion based on this very sharp upward flow. So the question is, where do we hold the edges? Where do they come in? And so the weekly low is 40.99. I anticipate that in the ES here, that is what we are looking at, this 40.99 region. And so that is going to be a key battleground for the charts today. Right now, we sit underneath the open and underneath the close of the prior day. And the prior 2 days have been a little bit downward. Now, what we did do is try to test the higher edges, but we really did come right into that 41.22-ish area, which is about 2 points higher than the prior day's 9:30 open. So that really is going to be the number that's going to be maybe a ceiling for us if price action is going to fade. If price action is going to hold, that's going to be the level we want to breach. And so the first breach, we anticipate a little pullback that might come into that 41.15, and if it holds 41.15, we're off to the races to the north. Notice from a ranging day, we've got we're inside of yesterday's motion, and yesterday's motion was negative. Right now, we might be balancing a bit. Here's my thought. My thought is the fades are still going to bring buyers, so you don't want to go short on the low. That being said, if we bounce and bounce and bounce into the early part of the day and we cannot breach 41.20, we've got more downside pressure coming. Because the markets are closed tomorrow and we have employment numbers ahead, it appears to me, or I suspect, that what traders will try to do is hedge. So if you're trading from the long side and about 2:30 or 3 o'clock, price action really starts to lose support, people are going to be adding hedges to their market action space. So again, 40.99 looks like the floor. If we lose it, 40.81 would be the next region of frontline support. My suspicion is this is where we're going. But price action has been very surprising to me of late. And so this move upward was very surprising to me. And so this is really what we are waiting for in the long run. Let's take a look at the NQ. The NQ is having itself several days of pullback. I do suspect that it's going to come into that 12,949. I do see tech repricing quite a bit. So above 13,082, we've got upside pressure. Below 12,949, we have downside pressure. And in between, they're going to fight the battle. Remember this. If you come in to 12,949 and you lose that level, in order to go short, it must bounce and then fail to recapture and present a lower high, simply because the trend is up on the daily, the weekly, in general, okay? So that's really what you want to think about, because shorting is counter trend on these daily and weekly charts right now. We just need a little mean reversion to help the price action settle itself out. Here's SPY. SPY is coming in. It closed at 407.60. It's coming in below 407.26. This is the expiry for some short call spreads that we have. My suspicion, again, is that we drift into the 406 and 405 levels simply because it's just a natural fade, and we've got a fair bit of gaps that are sitting in the formation. So that being said, that's what we're seeing for SPY. Above 408, price action will move to the north. Below 406, price action will move to the south. For the Qs, we see a lot more repricing, and here we are into the monthly high, the prior month's high, and we bounced off of there, but there still should be some additional rotation back into the downside. Tech could start to stumble around here above 313.50, 313.90. We've got bullish action, but only into prior resistance at about 316. All right, that's it for the morning report. I will see you all on the Benzinga Pro platform.